Good morning, everyone. Those who don't know me, so I'll start with a quick introduction. My name is Saqib Rasa. Currently, I'm working with Eleanor Healthcare Group. So, Eleanor Healthcare Group is one of the biggest groups in health industry. So, we mainly deal with dom care. We have learning disability and care homes as well, nursing care homes as well. We are also providing hospital logistics, and we are like keep growing. So like back in 2018, our revenue was around 20 million, and now we are hitting to 60 million revenue per annum. So almost threefold increase. We are working with more than 45 consoles and almost 6 to 7 ICBs in NHS. The agenda of the meeting is mainly concerned about consolidation. This consolidation is not particularly focused on health care sector, but also we will be addressing people working in other sector also facing same issues. So let me share my presentation.
And Saqib, just while you're bringing up your presentation, just to welcome everybody to this morning's Talking Health series discussion. This morning's session will be led by Saqib Rasa, who is a financial controller at Eleanor Healthcare Group and is also a member of our UK health sector panel. So Saqib is going to be talking us through some examples of consolidated reporting within his organisation, offering tips and solutions and materials which will be shared after this morning's discussion, and there will be time for questions afterwards. So yes, please, back to you, Saqib.
So our main aim is to keep the session short and like more helpful, so that that's why for this session we are mainly focusing on 3 challenges which we experience while working in healthcare sector. But these challenges are also similar if someone is working in any other sector as well. So first thing first, so first problem like which we were experiencing in our group, plus like so many people experience this, like when we receive late credit notes or backdated sales. It usually happen with our sales department because sales department's bonuses and progress is determined by their sales targets. So sometimes they achieve their sales target, but after 2-3 months down the line, we receive huge credit notes. So by that time, all the bonuses have been distributed and like performance have been assessed. And it's very difficult for management reporting purpose to include those kinds of transactions. Like if we are like, for example, we are now in month of November, and if someone brings credit note for month of April, May, or another example in healthcare sector, we have privately funded client. That client suddenly become council funded and fee at lower fee rate. So how we can report those credit notes in this month? When we are working in one organization, it's easy, but when we have volume, when we are dealing with bigger volume, like currently we are dealing with 45 councils. So when you have 45 councils, or you have 45 different departments, plus you have 10 or 25 different companies. Under every company we have multiple departments, and we keep receiving different invoices and credit notes which relates to previous period. So that thing become a bit challenging So the easier solution is for this problem to use prepare account using differential trial balance approach. What this approach is, in this approach we don't amend our previous month's account. So whatever accounts we have presented previous month, they remain constant. We compare last month trial balance with this month's trial balance, and we calculate the difference, and that differential amount we report as performance for this month. So though we are selling this month, but if we are receiving any credit or not, so sales for that department or for that month will definitely go down. So for this purpose, I have drafted an example. Let me share you the example. So let's see this example. So in this case, what happened? We already have finalized accounts for Feb 20. February accounts have been finalized. We are in month of March 25. As we can see, we have more expense line or more nominal codes in this month as compared to last month. So means we must have received some more expenses. The easiest way we deduct last month expenses. This we deduct this month expenses from last month expenses. For this purpose, we have three different options. We can either use index match plus if error, or we can also use VLOOKUP plus if error, or we can also use XLOOKUP. So approach is simple. We deduct this month expenses. We take a difference between this month and last month expenses. So we have net increase in expense as compared to last month expenses of 6,000 pounds. Doing that thing manually is a bit tricky. So handle this thing. We use formula. As I have mentioned, like we can use three different formulas: XLOOKUP, VLOOKUP, or index match. For this example, I'll be using XLOOKUP. So first we need to understand how that XLOOKUP works. So syntax of XLOOKUP is XLOOKUP, open bracket, we are searching this value, lookup value is this nominal code, and lookup array is my first column, and then return value, like if formula find this nominal code in this column A, so I want to bring value in column C here. Then I have two additional features as well. If formula could not find the value, then what value I needed? So I'll mention it that 0. So it means if the nominal code which I'm searching in column F, which is this, if I'm not able to search same nominal code in this column, then a formula will give me error, so in form of 0. And what kind of match I needed? I needed exact match. Exact match is if formula not able to find that nominal code, then it will give me error. So previous month we have food and grocery expenses of 43,000 pounds. this month, and previous month we had food and grocery expenses of 36,000 pounds. The difference between these we will calculate. So I will do 1 minute. So I'll take that thing in brackets. I'll use the same. I'll repeat the same formula again. X lookup. So I'm searching same cell reference. Search series will be same again, but this time I'm searching in on credit side. Error if formula fails to find anything, then I need 0, and match should be exact match. Now I need to deduct this value, which is for my previous month, from my this month's value. So this month debit minus credit. So net difference between previous month expense and this month expense will be my net expense, which I will be reporting in this month's management account. One question arises, why we are using this approach? What are the benefits? First of all, as I just have mentioned, that if we are receiving any credit notes for any month, or sometime we receive very late invoices, like sometime after 3 months or 4 5 months we are receiving an invoice, so that invoice will appear in my this month account, but at time of recording for my bookkeeping purpose, I'm recording that transaction correctly in the relevant month. Second thing, when I'm dealing with the banks or when I'm dealing with external bodies, I do not want to change my management account for previous month, because external bodies usually tend to say that your previous month account should remain same. So any change, any increase or decrease, you should report in this month's management account. Oh. So when we are using this approach, it's very helpful to keep my previous month account same and show any increase or decrease in this month's management account. I will simply drag this formula, and I have calculated the difference. Now I need to split the values between my debit and credit columns. When I'm doing this work, when I'm creating this working, so I'm taking approach that debit values I'm taking as positive, and all the credit values I'm taking as negative. Now I need to split those debits and credit in next column. For this, we can use if condition. If condition is very strong condition we can use in multiple ways, but here I'm giving you a simple example. So if open parenthesis, logic test is my column J4, if this J4 is greater than 0. So this is my condition. If this value is true, then I need this value. And if it's not true, then I need 0. Close. So all the positive values start appearing in my debit column. Now I need to show credit values as well. I will write the same condition again. If my logic text is same, J4. If J4 is less than 0, means value is negative, then I need this value without negative sign. So I will put another negative sign which will cancel existing negative sign. If value is false, I need 0 in this column. So when I will drag this, it will split my all debit and credit into their relevant columns. So after this practice, after doing this, I have revenues in my credit column and my expenses, which are differential expenses as compared to previous month, in my debit column. Because I'm using differential transactional trial balance approach, I can use these numbers to generate my statement of cash flows, because when we generating the statement of cash flow, we are calculating net increase in our net increase or decrease in our net assets. And when we are creating our statement of profit and loss and balance sheets, statement of balance sheet, we can use total of like the last month value plus or minus net increase. So it will give me my this month trial closing trial balance. These things I will discuss in further detail in next tab. So in my agenda point, we have discussed our first point, which is how we will be approaching this challenge, that if we receive backdated credit notes or if we are receiving backdated invoices. Second problem is very common for those organizations which are growing, or for those groups where we have different companies with different nature. And we need to generate statement of, we need to consolidate statement of profit and loss statement, and we have to consolidate balance sheet and cash flow. At a later stage, we will be using these statements to do our projections. So one of the example is, like, I'm assuming that I'm in year 2025 and In year 25, I have one organization named as Tango Limited, which is operating for full year. Then I have Alpha Limited. Alpha Limited is also operating for full year. Then I have Charlie Limited, which started its operation in month of September. It's quite possible that organization was in dormant state or we acquired that organization. And another organization which also starting in month of September, but that organization, like, they started operating only 11 days in that financial year. So we experiencing something similar kind of challenge, like we are operating in 2-3 different industries: domiciliary care, nursing care, care homes. We have hospital logistics. We are also have goods transportation company as well, material solutions. So those organizations were totally different in nature. Those organizations were managed by different director and different set of accounting. Challenge which we will facing there was we need to consolidate, but traditional consolidation approach is we use same nominal codes. But the problem we had with these organizations, one organization, like for this organization, Gamma Limited, we took over in month of September or October 24, and that organization was managed by a different accounts team, so they set up their charts of account totally differently. So it's quite possible we are using nominal code 4,000 for sales, but they might be using nominal code 5,000 for sales. So due to these issues, it was very difficult for us to consolidate using traditional nominal code approach. The problem of this solution we resolved is we were creating our management accounts using this transactional trial balance approach, which I just have discussed now, and using we created a separate sheet with for Gamma Limited. So and we link those individual nominal codes with this sheet. Let me scroll down. So the step which I just have shown you, we are doing here exactly same thing. So we were comparing Feb 25 trial balance with March 25 trial balance. The trial balance which I just shown you here. And I'm creating my transactional trial balance in this section. Once I have generated that transactional trial balance, from that transactional trial balance, I have generated this statement of profit and loss. How I'm bringing these value here, I'm using index match feature to bring my values from this trial balance. which I'm showing you on this sheet. So we are using same trial balance, but another challenge which we were experiencing, we had two different directors. They were operational directors, so they wanted to see information according to their requirement. So one director wanted to see different sets of information because they were more concerned about dealing daily managerial tasks. Other team, they were more concerned about looking into more sales data, like how they are performing in terms of sales variances, like efficiency variance, cost variance, like whatever new service user or new products which they're bringing in, are they at same level as they budgeted? And efficiency variance, like whatever in terms of numbers, whatever the target were set. So they wanted to see those operational information more. But when it comes to us, we another like group of people like which we were dealing with internally, they were more concerned about cash flow, how much cash flow that organization or that branch is generating. So it was for same accounts team, it was like bit difficult to generate three different sets of financial information. So what we did, we decided to use this template, which I'm showing you here. We produce our management accounts using this transactional trial balance approach. And from this same trial balance, we transferred information into three different management accounts. One management account, so they were designed according to external people's requirement. One set of account was designed according to operations director's requirement, and third set of information was designed for our finance team requirement. So it saves a lot time for us to generate those three different sets of information. How we are collecting information from this point, from this sheet to this sheet, that's like require another session. So I'm not going into detail of like how we are writing these formulas. So it's same, like it's a small formula, but we just repeating the same formula again and again. So if this formula finds, so what we did, we link our nominal codes here. So formula search these nominal codes in relevant month and bring the value in this cell. Second challenge was like, because we so by using this approach, whether we are using different nominal accounts, we are presenting information in same format. So Gamma Limited has different sets of nominal codes. Alpha Limited has different nominal codes, but because we have option to type these nominal codes here, not in series, but like differently. So we were bringing those nominal code according to our headings, or in other words, we can call it as similar charts of accounts. We were generating on Excel sheet. Once we have similar headings on this area, and this information is similar for all 4 sheets. Now we can consolidate in my consolidation section. So consolidation section can provide me information if I wanted to see any individual month, like I'm showing month of March 2025 here. And then if I wanted to see how my organization was performing for Q1. So as you can see, in Q1, Alpha and Tango Limited were operating, but Charlie Limited and Gamma Limited were not operating at all. In Q2, one organization started working, but Gamma Limited just started their operations. Q3 and was full operating. So in Q3, all 4 organizations were working for full quarter, and we can see the cumulative figures for that whole year as well. So further using this approach, next in like, so we shared this Excel sheet into one shared point, like we can put it on Dropbox or OneDrive. So we place that drive in OneDrive, and using OneDrive, 4 or 5 different people who were responsible for different organization were working on the same sheet at same time. So this approach not only increase our efficiency, but it also let us work on same deadlines simultaneously. So whole accounts team can work simultaneously on their respective departments or organization. By the time everyone complete their work, our this consolidation sheets gets automatically updated, because if person A is working on Tango Limited, person B is working on Alpha Limited, so as soon as they complete their individual account, this consolidated sheets gets automatically populated from those individual sheets. And based on this information, we can use same set of information to develop projections. So we can see this organization is generating in Q3. We are assuming that this organization is generating revenue of 455. So those average of those figures we can use and project how much we will be generating revenues, or how much expenses we will be incurring in next quarter. That information is very useful for finance department when they do planning their cash flow projection and when they're doing their cash flow budgeting. So let's say we are planning to acquire another care home, or let's say we are planning to acquire another business after 6 months. So with this approach, we can predict how much cash flow we will be generating from every business and cumulatively from the whole business. And then we can determine whether we need any external funding to support those ventures or these kinds of things. In addition to that, we can also add, as I have mentioned, variance analysis to same set of information. Like if I add one budget sheet here, and I can also do my budget versus actual comparison. That comparison I can do in terms of efficiency variance, cost variance, like, and other factors. So that's all. Like, so these were three main agenda points for today's session. Like, so if you have, so that's all from my side. If you have any further question on this.
Okay, thank you. Thank you, Saqib, for that. Was a really very thorough review of the different issues that you're facing in terms of consolidating reports on many levels, and the examples you gave of your spreadsheets, I'm sure will be very helpful to those that were attending this morning's discussion.